Hello, how you going? This is a video on WTI or US oil on the monthly, weekly, and daily time frame for an unbiased technical analysis for buying and selling opportunities, subject to confirmation rules, of course, and also taking a quick highlight of the fundamental macro environment taking place as to what I believe where price can take us. So I was going to also link below my US dollar CAD idea also, and I'll also attach that to the Telegram group. And please don't forget to like, subscribe, and share these videos. It also helps me help you, helps me understand what the audience wants to look for. And also leave a comment. It's really helpful for me to have these discussions with traders and taking the opinions and formulate strong discussions. I enjoy it, so yeah, help me out here. Also, check the disclaimer. I'm not a financial advisor. This is uploaded purely on my trading strategy. Do your due diligence upon your own trading confirmations. And if you're a longer term trader, this is more for you. But again, take your own rules and apply it. If you're a scalper, then I'm sorry, this is probably not for you because I'm not a scalper. I'm more a positional swinger trader. So yeah, let's jump into it. Hey, so looking at the overall monthly chart here, we can see that price has, in 2007, 2008, back all the way to 2003, provided that strong price action. I say strong. Strong at the time on monthly has provided choppy, in reality, price action, formulating strong basis of where price can take us back upon a curve. So price look to form two pullback levels, this being the strongest level here, thinking, oh yeah, in any crash environment, this would be a reactive buying halfway point or mid level, which it was for a short period of time. However, the original level in any environment whereby price looks for lows is here. So these three candles here indicate the opportunity for the strong positional play. And the reason being for that is this in particular has the two pullbacks and the retest candle. And it's an original level looking for three opportunities to test. It did go further, however, and has gone further previously, and obviously went back down to zero, which was, due to the contract expiring back in 2020 in May for the April futures. Right. So where price is taking us next is that upon 2008 high, an original level has been created. So upon the arrival of this point, profits haven't been purely taken, and original level suggests that a supply imbalance is now heavily favorable and will take us back with a strong curve to the downside. Not really creating a low curve at all. What I mean by low curve is that this is a low curve with price action starting to build upon like a ladder or a staircase before going steep like that. Whereas this is just pure 6 months drop in a row. So upon this, price needs deviation points or reversion points for those traders which trade at support and resistance, but it's ideally pivotal points here where price has not even taken us back to the original level, for the date range, for 13 years, 9 months roughly, by the looks of things. Yeah, so nearly 5,000 days, which is hectic. So, yeah. And now back in 2022, in March, prices now hit reactive sell upon the original level, which is what is to be expected. So now that we're at a reactive level on the original, price has created a strong curve from the upside from this tail low. The reason I've drawn it here is because this is the engulfing monthly, which I like to see. And it fits the criteria, albeit you don't draw line of best fit, you draw correlated lines which fit to the data, which make data fit to you. So, the reason, I need to get rid of that because that is on a weekly. That's coming up. So these are your fresh levels, strong imbalance here with the break, reversion, and the curve being tested here upon this price action. However, note that although this is a strong curve, the upside here, once this curve is broken, this point, the next positional point here is up here, meaning that price can take us upon from here to here. Strong, uninterrupted structure. Essentially showing a nice W wave, which is perfect. But again, price having just free amples of room to buy and free fall, let's say free fall, but it's free buying structure. So price will take us up to the original level again. And it did so in quick succession. So upon a selling imbalance, price should ideally test again to penetrate the zone. And I'll be looking ideally for anywhere for profitable takings here and roughly here. The reason being for this is because price needs to fully test the original level before the strong retest becomes in play. And that may be 2023, 2024. I don't know. I'm not a magician. But using the rules of PCP and original levels and supply and demand suggests that the optimal selling points are within this zone here based on price structure. So let's take it down to weekly for looking at buying opportunities and selling opportunities. So keeping in mind that this is a sell, reactive sell, suggests that price is in favor of sellers, right? And yeah, rightly so, because you're in the original level here, is your active tap, and every reactive tap suggests that selling is imminent back to the base. So, or your fresh level. So your fresh level, which price did immediately sell back to, and is immediately clear also on the monthly, that this is your new zone, and has created a strong curve still, but has created an opportunity from 129 bucks all the way down to 93 bucks, a great selling opportunity in very quick succession over 2 weeks. So with every active sell, there's going to be a reversion back to the mean. So that's very simple, right? Although we don't know the time period, but that is how the structure works. Price has now gone for a retest and failed to retest the high at present. So now you can draw your new zone around this doji candle, and has a probability of becoming a PCP level at some point, right? And the reason why I say that is for bullish opportunities is that the bull run's not over. The structure is still intact, albeit it's been broken on the weekly. Price can take us to swings back to this fresh level here, then begin to look at the curve again, create the new structure up to the PCP level, form a great trading range between $120 to $125 to all the way down to 87 to 95. So it's a great range here, but it can provide opportunities to go long upon new imbalances forming. So let's say this mid zone at present form a great structure, right? And we'll just say that it forms a nice imbalance here, which then equates to $101 to $107, right? So let's say price goes up, so it breaks through, retests, formulates in here, breaks through the hurdle up to the PCP, back here. This is your new fresh zone. Price can now bounce between here. As this zone is more tested more, the probability of breaking is evidently higher, subject to this being a stronger zone. The price can take us to the final supply. However, being a supply in control, you have to keep in mind that the fact that from a supply, price will take us to this level at some point, right? Now, it's not going to do it immediately. It did, but that's a reactive point from the curve to the back to the mean. Now that you're creating higher highs and lower highs in this aspect, shows us that price can break here, retest, break to the FL. More likely than not, subject to this being broken and break and retest occurring, price can have free fall all the way back down to this lower curvature. Now, this level has been tested numerous times and it has broken the curve in quotation marks, but it hasn't because it's always formed back inside the curve and failure to break again. So it would have been a bear trap, right? Now, price has then taken us back to the bullish momentum continuation pattern, so that counts as a PCP level on a fresh level. Where we are at present, though, price will allow us on the daily to show a clearer structure. So, in the short term, what I can see is that the daily imbalance can be drawn around the reactive sell, and you can see that the curve on the daily and weekly, let's put this as daily again, daily has broken the curve, tested, fallen back to retest this level. This is good, strong price action here. This is, albeit weak, it still has a lot of strong attributes to it, being a reactive sell upon a supply. That is all that needs to be said about that. And upon a retest, the orders are still going to be pretty heavy as it's an original level, so sales are just going to be taken imminently. So upon this structure, price has formed a new base here and conformed to a pattern which is produced nicely, 3 lower highs. So 1, 2, 3 on your lower highs. And the reason why I've drawn it around here as opposed to this one is because your block level is now changed from here to here. You can now technically draw it around here as your new FL reaction, which is your tap number 1. And then price can look to take us upon a rejection here from 110 back to here, take us back out, tap number 2, and then down to here. This level will break the floor pretty quick at some point, as sells again are in control. And this is your destination point for selling opportunities to take profits at. So if this level cannot hold, let's use tap number 1, tap number 2, meaning that probability is pretty low now, and a deep retest will most likely provide a subject to break. However, at the same time, with your strong curve, if the curve breaks and the PCP level is yet to be retested again, in terms of having this free level here and this fresh level here, price can take us to a break and retest, hit this, net out, sell back most likely, conform to a consolidated pattern here, test this fresh level, and then sell back down. So that is 2 probabilities subject to daily moves which occur. Now, the reason why I've drawn this PCP level here is because for 2 reasons, right? So you've got your original fiber up here, which a lot of people take as your 1. Take this as your 0. Your 0.618 minus will be roughly around here, maybe even a little bit lower. But it normally follows quite nicely to your fresh level zone. To the shorter term fiber traders, this is your new zone here. So that's your 1, your 0. Most likely this will be a 0.705 as a reactive, strong, high-risk sell, but the confirms of 0.75 suggest 0.0705 suggests that this is a strong reactive sell. This is most likely a 0.618, whereby price is netted quite nicely for an imbalance here as a possible retest. So price can take us back down to here, test your zero, and then take us further. So let's draw it on just for quickly showing purposes. So here's your zero, price is testing your 0.38, hit your 0.75, broke through your 0.618, and is now testing towards the zero. And the zone shows nicely that your minus 0.618 is your profit taking area. And also here with your deep correction in the daily. So that's perfect. Right, if you take it from here though, the top, and then call this your zero, we're technically testing zero. If you take it as that as the low, this is your minus 0.272 profit taking zone. We're technically testing zero right now. So it's a strong level. The curve suggests that price can take us still further south. However, we take it down here, we're not there yet, and we're maybe at the 0.236. I'm just going to chuck it on and see where we are. Not quite there yet, but we're bouncing between. So as price is getting higher, creating lower highs, at some point I can either see this playing out for a break, or this breaking, or like that, taking us back up. So either one will work. We just have to wait for the next coming days to take form and shape. I will link again on Tradingview the public and private view to the Telegram group. But that's all I've got time for today. Hope it helps, and yeah, I'll see you in the next one. Hooroo.